from investment property perspective, lots of people don't think about land taxes. Land tax they pay on the property, it is tax deductible. Body corporate fees, it is deductible as well. Borrowing expense is one of the major one. People don't realize that they can claim borrowing expenses as a deduction for their investment property, though it is over 5 years, but it involves the cost of establishment of loan facility, discharge fee, broker fee, loan admin fees, valuation fees, and LMI as well, loan mortgage insurance. It's part of your borrowing expense. So you can claim those expenses for your rental property.
Borrowing expenses are an interesting one, right? I think people don't tend to see borrowing expenses because when the loan settles, these are usually hidden on their statements or bank statements. They don't even show up on their bank accounts because, the bank would usually offset this against your loan and it would be a single number that would usually show up. And so it's important that, you hold on to those statements, especially when you're talking about lender's mortgage insurance, establishment fees, broker fees, valuation fees. All of these fees do amount to a big amount of money. These are not small chunks, right? Especially when you are buying properties at, say, 88% LVR or 90% LVR.
That's true. So it is somewhat hidden. So it is, if you have a good accountant, they can ask for settlement statement and put that information in the tax return.
Definitely. What about home office expenses? I know there is a lot of contention around this. And when you mention this to a tax agent, it'd be like, I'm not sure whether you should be claiming any home office expenses. Talk us through about there.
Yeah, so it is hangover deduction from COVID areas, COVID times when people used to work from home, and ATO allowed people to claim lots of home office expenses. There were different methods, and people is still trying to claim home office expense, though it is still possible, but it's not as much as you would do it previously. But yeah, if you're still working from home, you claim certain expenses, including some occupancy costs of your house, interest expense and rates and other utilities and things like that. You need to work out the basis of deduction, but yeah, you can still claim home office expenses as long as you're working from home, either part-time, full-time, doesn't really matter. You can still claim those expenses.
In today's time, you would see that, an average Australian is at least working 2 days or 3 days a week from home, right? So there is a lot of stuff that they can claim, especially like when you talk about running property as a business, you could be exposing yourself to a lot of this money that you're spending on. You might have a full-scale office that you might have created. I know developers tend to do that a lot where, they would have, their garage converted into a home office potentially, right? And so there is that's leaving money on the table if you're not considering some of these expensive as well.
That's right. That's true.
Now, I understand that, when you talk about property investing, people tend to, set up trusts and, set up companies and discretionary trusts and family, all of these things, there's a lot of deduction that comes together with that as well, isn't it? That people don't really think about.
Especially the setup costs of setting up to those kind of structures. They usually don't tend to claim those expenses because the trust is not established, for example, as yet. But you can claim these kind of expenses as establishment cost later on. Again, they're called sunk cost or black hole expenditure, but you can claim them in future over 5 years or whatever. Yeah, there's a way to claim that kind of expense. There are legal fees, legal expenses involved in managing all the finance side of things or documentation side of things. You can claim those expenses. Agents' fees, buyers' agents, sellers' agents' fees. Sellers' agents part of the cost base anyway. So buyer's agent fee you can claim as long as connected to your portfolio investment advice. You can claim that as a deduction. If it is just straightforward, just one buyer's agent fee related to one property, then it goes into as a capital expense, not as a normal deduction. But yeah, there are certain expenses you can claim in your trust as well, which you should be keeping records of. Yeah,
sure. Let's talk about the tools and equipments and the subscriptions that people tend to get to these days as well. People tend to spend a lot of money in that sort of space. What are the rulings around there?
So with regards to tools of trade, whatever you spend, in order to earn your income, you spend money on your tools in the IT-based client, for example, the IT-based work environment where you're working from home and you need laptop to work. That becomes your tools of trade, so you can claim deduction.